Listen closely, because right in this explainer, you are going to discover the exact financial contract that high net worth individuals use to protect their families and build accessible wealth. And more importantly, you're going to see how this exact same strategy is being specifically tailored for the unique income structure of teachers, substitutes, and student aides. If you work in education, you already know, probably better than anyone, that your financial reality looks vastly different from a typical W-2 corporate employee. You don't get those predictable year-end bonuses, you don't have massive corporate matching programs pouring into your retirement, and you certainly don't have the luxury of just ignoring inflation. It hits you right in the wallet. But here is the thing. There is a specific mechanism, a very real, well-established financial tool that is routinely used to build a robust financial safety net. And it just so happens to perfectly address the exact vulnerabilities of a career in education. We're going to break down exactly how it works, why it works, and how you can actually use it.
I'm going to show you something most educators literally never get shown, what it actually looks like to have a solid contract in place. This right here is the foundation of everything we are looking at today. If you are a teacher, a substitute, or a paraprofessional, I want you to just think back for a second to your credential program, or think back to your latest open enrollment period at your district, or those incredibly rushed orientation meetings you have right before the school year begins. Nobody ever sat you down and explained this to you, did they? Of course not, because human resources, bless them, is there to process your paperwork, make sure your W-4 is filed, and get you into the system. They are not there to build your generational wealth or protect your family from a catastrophic financial loss. So today, our goal is purely educational. We are going to walk through exactly what it looks like when you have a specific type of private contract in place, and honestly, the stark, difficult reality of what it looks like when you don't.
Now, before we even touch on the nuts and bolts of this contract, we really have to talk about the current financial landscape for educators, because this is the part that nobody ever puts in those glossy district recruitment brochures. Get this, nearly 2/3 of teachers report that they could not cover a $1,500 emergency without asking for help. 2/3. Just pause and think about what that actually means in your daily life. A sudden car transmission blowing out on your way to school, a surprise medical bill for your kid, or a leaking roof after a storm can completely derail your family's finances. Living with that underlying, constant financial anxiety while simultaneously trying to manage a classroom of 30 energetic students is an immense burden. It's exhausting. And on top of that, recent survey data shows that about 6 in 10 teachers actually earned less last year once you adjust for inflation, even if they got a small nominal raise from their district. Plus, fewer than 1 in 4 have any sort of retirement account beyond their mandatory state pension. That means the vast majority of educators out there are relying on one single, incredibly rigid plan for their entire retirement future.
And look, this financial pressure compounds even further when we look at support staff and substitutes. $35,000. That is the national median annual salary for a student aide or paraprofessional. Let that sink in. In fact, nearly a third of full-time support staff earn under $25,000 a year. Surveys literally show a meaningful number of aides are relying on food pantries or Medicaid, and it's definitely not because they aren't working incredibly hard. They absolutely are, but because the pay structure was simply never built to support a family. And what if you are a substitute teacher? Let's imagine a substitute named John. John's pay swings anywhere from about $80 to maybe $250 a day, wildly depending on the district and the assignment. If you break that down hourly, some subs are making dangerously close to minimum wage. If John gets the flu, or the school closes for a week, there is no assignment. And zero assignment means zero paycheck. There's no health insurance, no paid sick leave, no retirement match. I'm really not highlighting these numbers to be depressing. I'm bringing this up because this intense income volatility is the exact reason why this contract we're talking about matters more for you than it does for almost anyone else.
So, what actually happens when we layer an unexpected tragedy on top of these already incredibly tight margins? An accident, a sudden terrifying medical diagnosis, the things none of us ever plan for. Well, life without a private contract in place looks a lot like this. First, your family is left covering funeral costs entirely out of pocket, or worse, they are forced into the heartbreaking and humiliating position of trying to crowdfund those costs online through a GoFundMe. Remember, this is happening to a household that might already be one $1,500 expense away from total financial trouble. Second, any debt you were carrying? Yeah, it doesn't just magically disappear. The heavy burden of it falls directly on whoever is left behind. Third, there is absolutely zero lump sum to replace the income you would have brought in, leaving your grieving family scrambling to figure out how to pay the rent or the mortgage. And finally, if you are relying on a district's small group life policy, assuming you even qualified for one in the first place, that coverage usually vanishes into thin air the exact moment you leave that job. It does not follow a substitute taking a long-term maternity assignment in a neighboring district, and it definitely doesn't follow an aide moving between temporary contracts. You are left entirely exposed.
So we have to change the baseline. We absolutely have to. Now, I want you to picture that exact same family dealing with the exact same unexpected tragedy. But this time, there is a private contract in place. What does that actually mean for them? It means a guaranteed death benefit pays out directly to the people you name. And it is paid out entirely income tax-free, providing immediate, liquid relief when your family needs it the absolute most. And here is the absolute most vital part for educators. It protects your family regardless of what district you are working for that particular year, and regardless of whether you're teaching full-time, grinding as a sub, or acting as an aide. It is a fundamental baseline of protection that you actually own, completely and totally independent of your employer or your current assignment.
Okay, so most people understand that basic concept of life insurance, right? A payout if the worst happens. But now we are getting to the real insider mechanic that almost nobody ever takes the time to explain to educators. Certain types of permanent life insurance don't just sit there in a dusty drawer waiting for a tragedy to happen. They actively build what is called cash value. Think of this as a living, growing asset right inside the policy itself that builds wealth while you are very much alive and kicking. For someone whose district does not offer a strong retirement match, or someone like our friend John the substitute whose income is highly unpredictable from month to month, having a growing asset you can actually access is not just some small, neat detail. It is a vital secondary financial tool that can fundamentally change the way you manage your money throughout your entire career.
When we compare the standard approach to this private approach, the difference in strategy is just massive. With the standard district policy, you are essentially just renting your safety net. It's often highly conditional, and the major glaring flaw is that it ends the second you leave that specific job. It leaves you entirely exposed during transitions between schools or districts, which, ironically, is often when educators are financially most vulnerable. But with the private cash value contract, you own it. It follows you from district to district, from temporary contract to permanent placement, and all the while it is quietly building accessible wealth in the background. Relying purely on what the district hands you is simply leaving your family's safety to chance based on whatever your current employment status happens to be.
So you're probably wondering, how do you actually use this living asset? Let's break down the mechanics step by step, because it's pretty brilliant. Step 1, you fund the policy, and over time, it builds up that cash value we just talked about. Step 2 is where the real magic happens. Once that cash value reaches a certain point, you can actually borrow against it. Use the policy itself as collateral. You aren't cashing it out, and you aren't surrendering your life insurance coverage. You are borrowing against it in the exact same way you might borrow against the equity in a house to fix a kitchen. Except here, you are the one in control, entirely bypassing those stressful traditional bank approvals. Step 3, use those funds for real-life educator needs. Remember that staggering statistic about not being able to cover a $1,500 emergency? Well, this becomes your own private emergency backstop. You can use it to fund a down payment on a house, to cover the painfully quiet gap between paychecks over the summer if you're a substitute, to consolidate higher interest credit card debt, or even to fund the specialized teaching certification that finally gets an aide off support staff wages and into a licensed, full-time teaching role. It's totally up to you.
Now, this mechanic builds into an incredibly powerful tax strategy. Think about the difference between selling an asset and borrowing against an asset. When you sell an appreciated asset like, say, stocks or real estate, that generally triggers a taxable event. The government swoops in and takes a cut of your growth. But when you borrow against an asset instead, you are not actually selling anything, are you? Because there is no sale, there is typically nothing to be taxed on. Properly structured cash value life insurance works using this exact same math. The growth inside the policy isn't taxed the way ordinary income is, and a policy loan is not treated as taxable income, just so long as the policy stays in force. It's a remarkably efficient way to access capital.
Now, I want to be incredibly clear about this concept because I know how it sounds. This is not some shady tax loophole built exclusively for the ultra-wealthy. Not at all. It is simply a fundamental mechanic of how these specific contracts are built and regulated by law. The reason you haven't heard of it isn't because it's some closely guarded secret. It's honestly because these tools have historically been marketed almost exclusively to high net worth individuals who already have a wealth manager or financial advisor bringing it to their attention. Most hardworking teachers, subs, and aides just never get asked. The financial industry inadvertently gatekeeps this strategy by pushing educators toward either buying cheap temporary insurance or worse, telling them to do nothing at all and just rely on their pension. Both of those options completely leave out this incredibly powerful living utility.
Of course, because we are talking about robust financial contracts, the structure is literally everything. It is absolutely essential to speak with a licensed professional about how policy loans, interest rates, and tax treatments apply to your specific situation and your specific policy. Your death benefit and the policy will stay in full force while you utilize these loans, provided that the loan terms are properly maintained. This isn't a magical money tree that just prints free cash. It's a precisely engineered financial tool. And that is exactly why having an expert build it around your actual life, your actual income, and your actual goals is so critically important. If it's built wrong, it doesn't work. If it's built right, it's a game changer.
Okay, let's do a quick recap of everything we've uncovered in this explainer today, because we covered a lot of ground. 1. We established that educators are navigating significantly tighter financial margins than most typical W-2 employees, facing less emergency savings and intense income volatility, especially if you're a substitute or an aide. 2. Without a private contract, your family is left entirely exposed to absorb the devastating shock of funeral costs and transfer debt on top of those already tight margins. 3. With a private contract in place, you guarantee a direct, income tax-free payout to the people you choose, entirely independent of any school district or temporary assignment. 4. Certain permanent policies build a living cash value that you can use as collateral, essentially acting as your own private emergency fund for things like summer income gaps or continuing education. And 5. This borrowing mechanism is the exact same method high net worth individuals use to access capital while effectively managing taxable events.
Look, your income structure and your benefits gap are entirely different from a standard corporate employee. A standard off-the-shelf financial plan simply does not account for that reality. You need a plan built around your actual job and your actual life. If you learned something from this video, please like and subscribe to the channel. And if you want to see exactly what this could look like for your unique situation with absolutely no obligation and no pressure, make sure to click to call licensed agent at 559-598-7151.
So, I want to leave you with one final, absolutely vital question to think about. Will you leave your family's future to chance, relying on a rigid district policy that vanishes the second your employment changes? Or will you take control today and build a solid, portable financial plan around your actual life? The tools exist, the strategy is proven. The next step is entirely up to you.
Thank you for watching. If you found this video helpful, please like and subscribe. Your support helps us reach more people with practical financial and insurance education. Be sure to explore our channel for more videos on financial literacy, retirement planning, life insurance, Medicare, and wealth-building strategies. Ready to take the next step? Check out Financial Literacy XL on Amazon for a practical step-by-step guide to budgeting, saving, investing, debt reduction, retirement planning, and building long-term financial security. Your financial future starts with the right knowledge.